Hello, my name is Nurul Anifana binti Ahmad Khairi.
Hi, my name is Siti Najah binti Anwar.
Hi, my name is Siti Dina Soha binti Nordin.
Hi, my name is Nur Afika binti Jamaluddin.
My name is Kairunisa binti Harun.
We are from Group C.
I will explain about Mfrs 134, Interim Financial Reporting. This standard govern our quarterly update, focusing on timeliness so the shareholder doesn't have to wait till the year end to see the progress. While company can provide a full set of accounts, most use the condensed set because this format prioritizes the selected explanatory notes to highlight significant changes to up the technicality. Mfrs 134 by all accounting policy remain consistent with the annual report to ensure the comparability. A unique rule here is the income tax, which is estimated using the average annual effective rate for the entire year. Ultimately, the report focuses on the significant events since the last annual update, making it the perfect tool for the MIC to disclose major development like our LCO2 project and our latest dividend declaration to the market that I will explain later. Next, I will explain about two significant events and transactions in MIC Berhad. Moving to the first major event. In June 2025, MIC achieved a breaking through in the carbon transport sector. Alongside with the partner like Petronas and Mitsui OSK line, we received the DNV GASA certification for our 62,000 CPM LCO2 carrier. This prestigious approval validated that the MIC design meet the highest global safety standard, moving the company from the drawing board to the real-world application. Strategically, this project delivered three pillars. The first one is ensure the capital efficiency by sharing the financial risk. The second one is accelerate through our research and development through early partnership with institutes like SDA, RI. And the third one is secure the captive demand by aligning with the major CCS project like Northern Light to guarantee the long-term revenue. The vessel itself is a game changer. It's one of the world's largest LCO2 design, utilizing the low pressure or temperature system and an LNG dual fuel engine to minimize its own emission. It is purpose-built to scale the carbon logistics across the Asia Pacific. Finally, let's look at the second significant event. For the financial year 2025, MIC has demonstrated incredible resilience and growth. MIC has announced the total payout of 38 cents per share, which notably exceeded the market expectation with 36 cents. With a profit after tax reaching over 1.7 billion ringgit, this dividend isn't just a payout, it is a strategic signal. It reflects the disciplined capital management and absolute confidence in MIC long-term earning visibility. MIC remain committed to delivering the consistent and competitive value to every shareholder.
I will continue the presentation with interim financial reporting for PBB Group Berhad. Here, let's take a look at types of quarter, which means the first quarter is from 1st January until 31st March. Second quarter is 1st April until 30 June. The third quarter is 1st July until 30 September. And the fourth quarter is the 1st October until 31st December. Next, here is the interim statement of profit and loss and other comprehensive income. For current period, is covered from 1st July 2035 until 30 September 2035 and will be compared to 1st July 2034 until 30 September 2034, while the cumulative period is starting 1st January 2035 until 30 September 2035 will be compared to 1st January 2034 until 30 September 2034. Next is interim statement of financial position. The current period covers from 1st January 2035 until 30 September 2035, while cumulative period is referred to the full year of 2024. Next, the statement of changes in equity will follow the 9 months ended 30 September 2025 compared with 9 months ended 30 September 2024. Next is statement of cash flow will follow the 9 months ended 30 September 2025 compared with 9 months ended 30 September 2024.
Okay, so today I will briefly explain Mfrs A operating segment. Mfrs A require a company to disclose financial information based on their operating segment. An operating segment is a part of business that earn revenue and incur expenses, and it performs its review by the Chief Operating Decision Making or CODM. The purpose of Mfrs A is to help users understand how the company earn money and which segments are performing well. This standard uses the management approach, meaning company report segment information based on internal report used by management. A segment must be disclosed separately if it meets the 10% threshold for revenue, profit or loss or asset. Okay, next, before a company report its segment under MFRS 8, there is one important question: who actually make the decision? That person or group is called the Chief Operating Decision Making or CODM. The CODM is not about job title, it is about authority. It's referred to whoever has the power to allocate resources and evaluate the performance of operating segment. In simple terms, the CODM decide where the company invests its money and determine which segment is performing well or needs improvement. It could be the CEO, senior management, or even the board of directors, depending on who truly control the decision. For example, if a company has manufacturing, product and services segment, the CODM decide how much budget each segment receive and review which segment make profit or loss.
Next, let's look at two examples of the Chief of Decision Making CODM in publicly listed Malaysian companies. First, we have MISC Berhad, formerly as Malaysia International Shipping Corporation, a leader in energy-related maritime solution. At MISC, the CODM consists of the board of directors and the president and group CEO, Mr. Zaid Osman. They focus on reviewing internal report across key segments such as gas asset, petroleum shipping, offshore business, and marine engineering. This illustrates how the CODM act as the primary leader in steering the company's maritime performance. Second, we have PBB Group Berhad. Unlike the first example, PBB is a highly diversified investment holding company. Their CODM consists of the board of directors and the managing director, Mr. Lim Soon Huat. Their primary focus reviewing internal report on segments such as green and agribusiness, consumer products, film exhibition and distribution (GSC), and property development. Strategic decisions are made collectively by the board to ensure all these various segments remain aligned with the group goals. Moving on to the question 3 regarding the two types of segmental report used in financial reporting. For this, I will use PBB Group Berhad as my example. There are two types of segmental report, which are business or operating segment report and geographical segment report. First, the business segment report show performance based on different business activities. As we can see, PBB Group Berhad divide its business into 5 main business activities, which are grain and agribusiness, consumer product, film exhibition and distribution, property and other operations. This report is vital because it discloses the revenue, profit and asset for each business area, allowing stakeholders to identify which part of the business contribute the most to the total profit. Second, the geographical segment report presents revenue and non-current assets based on country or regions where the company operates. Since the company operates mainly in Asia, this report is crucial. For example, in 2025, PBB Group Berhad reported revenue of 4,571,200 ringgit from Malaysia, 661,749 ringgit from Vietnam, and 189,966 ringgit from other Asian countries. This provides a clear picture company's market exposure and help us understand how economic conditions in specific country might impact their overall financial health.
As the last presenter, I will conclude our discussion by highlighting how this disclosure actually benefit the users of financial statements using MISC Berhad's 2025 report as our case study. The first key benefit is the ability to perform a targeted risk analysis. Large entities like MISC operate in vastly different economic environments. By looking at MISC audited report, we can see that the auditors specifically identified impairment of goodwill as the key audit matters for the petroleum segment alone. Without segmental reporting, this high-risk area would be buried in group figures, making it impossible for users to evaluate industry, the specific risk and the sensitivity of key financial assumptions. The second key benefit is improved performance monitoring and accountability. Segmental reporting allows users to isolate the financial impact of complex division. For instance, on the audit report, the auditor focused on revenue recognition, specifically for the marine and heavy engineering segment. This transparency ensures that the unique challenges of long-term construction contract are visible. It prevents a scenario where a highly profitable division hides the inefficiency or underperformance of another, allowing users to hold management accountable for each specific business unit. To support this, let's look at this snippet from MISC's 2025 financial report. You can see the clear distinction between segments. Notice how petroleum and product shipping generates the highest revenue at 5.1 billion ringgit, while the gas segment, despite lower revenue, maintain very high profit margins. This detailed breakdown is exactly what MFRS 8 aims to achieve. enabling us to evaluate the nature and financial effect of MIS's diverse business activity across different sectors. In summary, segmental reporting is a vital tool for transparency, allowing users to peel back the layer of a conglomerate to see the true risk and performance of its part. Let's conclude our group presentation. Thank you for your time to listen.